John Meyer. He's head of natural resources and mining at Fairfax. John, good to have you in the studio with us. Let's start with Alcoa then, because they said that their customers, particularly those in Europe, have cut back dramatically on orders because of the economic uncertainty. Is that something you expect to see across the board?
I think there is destocking, which has been going on for a while and which we've seen in action. I think clearly this is an impact of the European banking crisis, so companies that can't get finance from European banks are now suffering. We're seeing that in the steel markets, where traders are asking producers to cut back on the production of rebar, for example, which is a key ingredient in construction, and that's all starting to feed through. But elsewhere in the world, demand is still seen as strong. China, developing economies. Some of the problems in the West, and let's not forget the problems in the United States, which are very real and still very much there.
Deep-seated, yeah.
Deep-seated, yes. The danger is they might feed through into China and India. I think what will happen is policymakers will stimulate demand locally, though.
Okay, so you raise a number of interesting points there. I just want to hone in on something you say about the banks and difficulties with financing, because a prominent feature of the downturn which affected mining companies in late 2008 was the shutting of mines and plants as companies, of course, slashed production. It was all part of cost cutting. And I'm just wondering, do you think we're reaching a point now where some metal companies, perhaps Rio Tinto, BHP and others, will have to consider closing operations?
Well, in 2008 we had a dramatic and severe collapse in just about everything.
Yeah.
This time it is a bit different. We've got some of the same issues going on, but policymakers are quite well set up to deal with these issues. Now, okay, Slovakia voting against the ECB bailout increase is a bit crazy, and frankly I think the European Union needs the ECB bailout more than it needs Slovakia. But there's another issue. So I think the situation will get solved. I think markets will look through the turmoil that's going on now, but we're likely to see ongoing volatility in commodities. But I think when you look at the likes of Rio Tinto and Xstrata, which we would recommend today, that those stocks have priced in a lot of what's going on, a lot of the negativity.
Okay, so all that's been priced in. For how long? I mean, for how much of a downturn or how much economic uncertainty would you say, like this year and then next year?
I think we're pricing in what we see today. If we have further collapse, then those stocks would go down further. But I think actually they're much more robust than Alcoa. They are a more global business. They're not selling window frames to construction companies in Europe. They're selling iron ore into China, and that's still a very, very strong market. What I'm more worried about than pricing is volumes. If we see a cutback in volumes elsewhere in the world, that tonnages of iron ore and coal being shipped, then that would be an issue. But again, coal prices are very high, iron ore spot markets very high. And it all says that 2011 is a strong year for these companies, and therefore the earnings season starting February, March is going to be good for these companies.
All right. So I'm just wondering, I mean, you say that the likes of Rio Tinto and BHP are in a better, stronger position, or rather less vulnerable to a downturn compared to the likes of Alcoa. But nevertheless, you touched on this point about the possibility of trouble in the developed world spreading to emerging markets, countries like China perhaps not being as immune as they were before, and what that would mean for demand for these commodities.
If we look back to 2008, the Chinese were very quick to stimulate local demand, to keep their factories going, to stop a build-up in inventories that can damage prices. And we're already starting to see the Chinese acting. They're buying stocks to shore up their own banks. They don't want to see the Chinese economy suffer because of stuff going on in the Eurozone.
We've seen that positive sentiment reflected just today in the price of copper, haven't we?
Yes, that's right.
But John, let me then finally ask you about the price. You said that you're expecting a very good earnings season for a lot of these mining companies, but prices for base metals have slumped. I know that you said they've bounced back, but they've had a tough first half. Bulk commodities as well are off their peaks earlier on in the year. Does that mean that we have seen a peak for mining company earnings as well then, for the time being?
It's going to be very hard to go back to where we were a few years ago. So, yes, mining company earnings are off their peaks, but I still think they're going to be relatively strong. I think, and compared to what's going on in other sectors in the marketplace, very strong. And for investors who are looking for protection against inflation, and let's face it, inflation is what we're going to get.
You like gold?
Yes, yes,
okay.
We do, yes.
All right, thanks very much. John Meyer, Head of Natural Resources and Mining at Fairfax. Good to talk to you.